Hello, welcome to IGTV. I'm Angeline Ong, and this is your look ahead to the week starting the 26th of February. And what a busy week it's been already with Nvidia. Also, more numbers showing that the US economy appears to be humming along really nicely. In the economic calendar in the coming week, we've got the UK CBI distributive trades. The big one from the US, new home sales. If we see any indication of more data showing a robust US economy, then it could give the Fed more headroom to dial back further those first Fed rate cut expectations. Further along the week, it's US confidence and German confidence as well. We've also got the consumer price index out of Japan and API crude oil inventories on Wednesday. Rate decision out of New Zealand, and also the monthly CPI indicator from Australia. Australia standing pat there, wait and see stance before doing anything. Pretty much of the Eurozone as well, given the comments we had recently from policymakers. Here, I think everyone's really waiting on the Fed. And the US, we get US GDP growth rate. This is the second estimate, and EIA crude oil inventories too. Then on Thursday, a lot of retail sales going on. Japan, Australia, and Germany, all three out with their latest print. Germany also has inflation figures, and it's the core PCE to watch out for out of the US and pending home sales. And last but not least, it's all about the global economy. China and the US out with manufacturing PMIs, especially in a week when we've had green shoots of growth indicated anyway on the manufacturing side of things out of the Eurozone. Let's cross over live now to Chicago, where Anthony Batista is waiting for us. Anthony, of course, is from Tasty Live, part of IG Group. But I guess the biggest story is that surprisingly upside from Nvidia this week. The question is, can it continue to power and lift the markets?
Yes, you mentioned consumer confidence coming out. Boy, with the market at highs, Nvidia gained, what, $280 billion? Let's just round up. I mean, it's just $1 billion amongst friends in one day. Those are monumental moves. You know, the CBOE volume was over 52 million contracts yesterday. That's 11% higher than normal. Volatility is low. Volume is high. Stocks are making new highs. The Dow is making new highs. I mean, right now it seems like smooth sailing.
And many of the economists and traders and also analysts that we've been speaking to, I mean, there's this real chatter about how we're seeing perhaps a new age, if you like, a new AI sort of phase.
The new industrial revolution.
Yes, and we're only seeing the tip of the iceberg. Would you agree to that, or do you think this might just be an early blip and then things might really calm down, and perhaps AI might go the way of blockchain? Like we spoke about blockchain, but no one really talks about it much anymore.
Yes, you know, it almost sounds surreal, right? I mean, like the real opportunity is to look beyond the technology and find ways to give the greatest number of people the ability to positively impact, you know, their families, organizations, businesses, communities. It almost sounds a little too good to be true for this old guy, but I love the direction we're going in.
And we had further indications this week, and perhaps more to come, given we've got speakers as well out next week, suggesting that perhaps, you know, the Fed's got more reason to kind of hold back and, you know, wait and see to see what the data says before they actually do anything with the first rate cut. And certainly I've seen the Fed fund futures showing that markets now pricing in a June cut.
Yeah, bonds are the only thing that's, and bond volatility is very low, by the way. And I'm talking about the longer end of the bond here. Very complacent, going sideways. I would have expected that. I would have expected bonds to rally a little bit. So if I was leaning any direction, I might be looking to buy dips in any bond on the curve, especially maybe even the 30-year. For me, I think that's the only missing piece of the puzzle right now for what's happening in the market.
Right. Thank you very much. We have to leave it there. Anthony Batista from Tasty Live, all the way from Chicago. Now, it's an equally busy week on the corporate front. We start off with Zoom on Monday, and also we've got earnings elsewhere during the week. On Tuesday, the big one to look out for is eBay, as I mentioned earlier, Q4 earnings. This is one of the top names from the US corporate space. Not much there. It's sort of petering out now. But we've got Aberdeen full year earnings, Smith and Nephew, Munich Re, and Bouygues as well. Wednesday, Taylor Wimpey is the one to watch. This one's really one of the popular ones amongst our clients. UK house builders tend to see quite a bit of volatility. Reckitt Benckiser as well, out with full year earnings behind the brands like Sillet Bang. Aston Martin, Lagonda, and JustEatTakeaway.com, Salesforce, and Snowflake also deliver their report cards. And we got Ocado, Haleon, IAG, AB InBev, Hewlett Packard Enterprise, and Best Buy earnings out on Thursday. And last but not least, Pearson out with full year numbers on Friday. So a really busy week. It's also the second anniversary of Russia invading Ukraine on the 24th of February. Just a reminder there. This is IGTV, and I'm Angeline Knoll.